Welcome back to Crypto Macro Insights. I'm Maya, and it's Wednesday, September 3rd, 2025. Tom, we've crossed into the final 24-hour countdown. Yesterday you upgraded your conviction to 65% on the bull case, and overnight we've seen some absolutely fascinating developments. Bitcoin has actually strengthened to $111,000, that's a $2,000 move higher since our last conversation. More critically, the reverse repo facility has now collapsed to just $18.7 billion. That's another $2.3 billion drained in just 24 hours, Tom. Are we witnessing the final liquidity dam breaking in real time?
Maya, what we're witnessing is beyond unprecedented. It's actually accelerating exponentially. That 18.7 billion figure represents a 84.4% collapse from 6 months ago, but more importantly, we're now seeing $2 to $3 billion draining daily. At this pace, we could hit single digits within a week. But here's the kicker. Bitcoin's moved to 111,000 overnight, right as retail psychology hit peak despair, confirms my thesis completely. I'm actually upgrading my conviction again, from 65% to 70%. The smart money positioning is becoming undeniable. While retail is capitulating into gold mining stocks and talking about prolonged unemployment, institutions are quietly accumulating ahead of tomorrow's ADP data.
Speaking of positioning, we also got the FOMC press release today showing continued dovish undertones, and the ECB kept rates unchanged as expected. But what's really caught my attention is this Red September narrative that's completely dominated social media discussions. Bitcoin has historically dropped 3.77% on average each September since 2013, yet here we are with Bitcoin actually strengthening ahead of the most critical employment data in years. Tom, is this historical seasonality pattern about to be completely shattered by the liquidity tsunami you've been tracking?
Maya, this is exactly what happens when unprecedented macro forces override seasonal patterns. The Red September effect exists because September is traditionally when liquidity tightens, institutions rebalance, summer trading volumes fade, risk-off sentiment dominates. But we're dealing with the opposite environment. We have $300 billion of liquidity that's been forcibly ejected from reverse repos into the system. This liquidity has to flow somewhere, and with retail completely capitulated, it's flowing into risk assets through institutional channels. Bitcoin's strength to 111,000 in the face of maximum seasonal pessimism is the market telling us that this liquidity tsunami trumps all historical patterns. I'm actually viewing the Red September narrative as the perfect contrarian indicator, maximum pessimism at exactly the wrong time.
So let's talk about tomorrow's ADP National Employment Report. The consensus is expecting 145,000 jobs added, but given this retail despair you've been highlighting, people talking about being unemployed for months, genuine economic anxiety, do you think we're set up for a significant miss? And more importantly, how do you think the market reacts if we get a number significantly below expectations?
Maya, I think we're set up for a significant miss, but here's the critical insight. We don't even need a catastrophic number anymore. With $300 billion in liquidity already in the system and Bitcoin positioned at 111,000, even a modest disappointment, say 100,000 jobs versus 145,000 expected, could trigger the Fed accommodation narrative. The market is now so liquid and institutions are so positioned that any excuse for continued dovish policy becomes rocket fuel. But if we get a truly weak number, sub 80,000 jobs, combined with Friday's non-farm payrolls confirming the weakness, we could see Bitcoin explode to 125 to 130,000 within 48 to 72 hours. The liquidity is there, the positioning is there, we just need the narrative catalyst.
Given this upgraded conviction to 70% and Bitcoin's move to 111,000, are you adjusting your position sizing or stop-loss levels? Yesterday you recommended maximum 3 to 5% portfolio allocation with stops at 105,000. Does the overnight strength change your risk framework?
I'm keeping the 3 to 5% allocation unchanged, Maya, but I'm tightening the stop to $108,000. Here's why. Bitcoin's move to 111,000 overnight shows the market is already pricing in some probability of weak employment data. If we get strong employment numbers and Bitcoin falls below 108,000, it would signal our thesis is completely wrong, that this liquidity isn't flowing into risk assets as expected. But here's the key insight. I'm actually adding a scaled entry strategy. If we get weak ADP data tomorrow and Bitcoin breaks above 113,000, which is major technical resistance, I'd consider adding another 2% allocation with a stop at 111,000. The idea is to size up into strength if the thesis plays out, but maintain strict discipline if it doesn't.
What fascinates me is this extreme divergence between social media sentiment and price action. While Bitcoin is strengthening to 111,000, the social sentiment is genuinely despairing. People are talking about rotating entirely into gold mining stocks, expecting massive corrections, predicting economic catastrophe. Tom, is this the most extreme contrarian setup you've ever witnessed?
Maya, in 15 years of macro trading, I've never seen sentiment price divergence this extreme. We have retail genuinely convinced that economic Armageddon is imminent, while institutional money is quietly positioning for explosive upside. The reverse repo collapse to 18.7 billion proves that smart money is already moving. This isn't retail money driving Bitcoin to 111,000. This is institutional accumulation ahead of what they believe will be a Fed accommodation cycle. The beauty of this setup is that retail capitulation provides the perfect entry liquidity for institutions. Every retail seller at 108 to 111,000 is providing shares to institutions who understand the macro picture. When the employment data confirms the narrative and Bitcoin breaks above 115,000, retail will be forced to chase at much higher prices.
So as we enter these final 24 hours before the ADP report, what should our listeners be watching most closely? Beyond the employment number itself, are there any other indicators or market signals that could confirm or contradict your thesis?
First, watch the reverse repo facility. If we see another $2 billion drain tonight, we'll be below $17 billion, which would be absolutely unprecedented. Second, watch Bitcoin's overnight action. If it consolidates above 111,000 or even pushes toward 113,000 ahead of the data, it's confirming institutional positioning. Third, watch the VIX. It's currently compressed at 16, but any spike above 20 would signal broader market stress that could complicate our thesis. Fourth, watch Treasury yields. If the 10-year, 2-year spread continues widening from its current 0.62%, it's pricing in growth expectations, not recession fears. Most importantly, watch for any signs of retail capitulation accelerating. If social sentiment gets even more bearish while Bitcoin holds or advances, it's the ultimate confirmation that smart money is accumulating into retail despair.
Extraordinary analysis, Tom. To summarize for our listeners, we're now in the final 24 hours before potentially the most significant employment data of this decade. The reverse repo collapse has accelerated to $18.7 billion, representing over $300 billion in liquidity injection with $2 to $3 billion draining daily. Bitcoin has strengthened to $111,000 despite peak red September pessimism, confirming institutional accumulation ahead of tomorrow's ADP report. Tom has upgraded his conviction to 70% on the bull case, maintaining 3 to 5% position sizing but tightening stops to $108,000. The thesis remains, weak employment data combined with unprecedented liquidity could trigger explosive upside to $125,000 to $130,000. The contrarian setup is extreme, retail genuinely despairing while institutions quietly accumulate. Tomorrow's ADP report at 8:15 a.m. Eastern could be the catalyst that defines the next phase of this macro cycle. Key levels to watch: 113,000 resistance, 108,000 support, reverse repo facility approaching single digits. Remember, in extreme markets, extreme preparation meets extreme opportunity. The 24-hour countdown to truth begins now. We'll be back tomorrow immediately after the ADP release for real-time analysis. Stay disciplined, stay positioned, and prepare for what could be the most significant 48 hours in crypto history.